Hi, we're back with Lender Talk. So, a couple of weeks ago, we had this couch conversation about what's going on in the lending world. And so, we had a lot of good feedback. So, we're here again. My good friend Mindy Foster with Caliber Home Loans is going to talk to us about the topic of the housing bubble. How are you doing, Mindy?
I'm doing great. Thank you, Sylvia. Thanks for inviting me back. The feedback was really great from last time, too.
Awesome. So, um, we're both getting this question, what's going on in the housing bubble. We just met with the new buyer this morning, and that was one of her questions, what does it look like for the summer months? So I'll let you take it from here, give us a little bit of history, and go.
Yeah, well, I appreciate it. So exactly like what you said, we've been getting a lot of questions about the housing bubble, but I like to always look at the history of where we were so that we can see where we are, and then also kind of have a projection about what we're going to be looking at in the future. So the last housing bubble was back in 2006, and there are some great differences from what we saw in 2006 versus to today. And one of the big ones is that in 2006, we had a lot of unfair lending practices, which led to artificial values. Also, what we're seeing today is that the increased values are due specifically to demand. So two big factors going on there. So let's dive into those just a little bit more.
Okay.
So back in 2006, if you went into a lending office and said, hey, I've got a job and I want to buy a home, the lender said, great, let's go ahead and get this done, and you were done.
That's it.
That's it.
That's
the
scary.
stories that I've heard have been very interesting, to say the least. So whenever we had that, then you had people that were in homes that just really couldn't afford it. So after 2006 and the market crash, the government came in and they established some guidance for lenders of what we have to do for our due diligence to make sure that buyers can actually afford that mortgage. And so one of the big things that we look at is going to be the debt to income ratio calculation to ensure that our buyers can afford the mortgage payment and still have a healthy living, right? Because you don't want to be house poor, so to speak.
Yeah, you want to be able to afford to go to dinner every now and then, do fun stuff.
They also came in and highly regulated the relationship that lenders and appraisers can have. So it used to be that lenders and appraisers had a very tight, close-knit relationship, but today we're regulated on how we can communicate with them, the language that we can use, and then there's an entire protocol of just the interaction that we can have, and it's to safeguard buyers and to make sure that the appraisers are going to give a true assessment, a true value of what that home is.
And that's the appraiser's opinion.
Correct.
Basically. Okay. So I guess that's kind of scary too, that they had a close, it's almost like a buddy system, like, oh, it needs to appraise at this. Okay, yeah, we'll do that. So there was really no protection.
Correct.
Right. For the buyer and the lender, I guess.
Right.
Or the bank.
Right. So whenever the federal government came in and established all these rules, it was to protect the buyers, to make sure that they're getting a true value of what that home is and not an inflated value.
Yeah. Okay. Nice.
So one of the other things that we want to take a look at is what's causing the demand now versus where we were at in 2006. So in 2006, whenever the market started to turn, we had a lot of homes on the market, but we didn't have enough buyers, and that exacerbated the issue. Today, what we're finding is basically three different things. One is that we're finding younger generations are buying earlier than what historical trends have shown us. So it used to be that we would find people buying their first homes late 20s, early 30s, but we're finding now that people are buying in their early 20s and they're able to do this. So that's one thing. The other thing that we're seeing is that older generations used to sell their home and then they might spend 6 months up north, 6 months down south, so they don't really need a home, or they might travel a lot more. But now what we're finding is that older generations are retaining their home ownership.
I have a story. Can I tell a story real quick?
Of course.
So our office had a seller seminar last night, and to invite people, we focused on a few neighborhoods that we work with on a regular basis. And one of my good friends, one of my old neighbors, called the office. He got the flyer and he said, hey, just to let y'all know, I'm 91 years old and I'm not selling my house. I'm dying here. So that's kind of what you're saying is they're not looking to turn those homes over and move on to something else. He's essentially gonna die there. He's not moving.
Right. And we're finding that parents are going to they're retaining those homes so they can pass them on to their children as an investment. And then the third thing that we're finding is that after 2006, builders slowed their production greatly, but our population continued to increase. So now we have a larger population, but the amount of homes that have been built has not increased at that same value, same rate. Right. So when you look at the younger generations, the older generations, along with the builder production, all of that has really just shown this increase in demand. And then whenever you look at it, it's a simple economics equation of supply and demand. The fewer the supply, then you're going to have higher demand for things.
Yeah. So just a recap, the answer that we gave to the buyer this morning, are things going to change? Is it going to slow down? The answer is
I don't think it's going to slow down significantly. Definitely not what we've seen in the past. I don't think that we're going to have a flood of markets of people that aren't able to afford their homes. Lenders have done their due diligence for that. Appraisers are doing their due diligence as well with values, and we have a high demand for people wanting to buy homes.
Yes. So last thought before we end this, if you are a buyer and you're running into this, the high competition, know that in the summer months, more people look to sell because that's a good time for them to move. So we do project to see more homes come on the market. If you are thinking of selling, now's a great time. You have a big buyer pool, you have more buyers. Definitely encourage you to speak to a lender, a local one like Mindy that knows what's going on here in this area, and she can really help you with tax values, HOAs, all of those small details that someone from out of state really can't help you with. They have to look it up. She knows it very well. So thank you for coming out today and doing our lender talk. We will see you in a couple of weeks.
Great, thank you.
You're welcome.
Bye.